Good morning. I'm Andy Myers at Weiss Research, and this is your morning market alert for Friday, July 29th. We may see another day of losses on Wall Street following an extremely weak report on economic growth. In addition, investors seem to be growing more concerned about the approaching August 2nd deadline to raise the debt ceiling. Republicans and Democrats are still far apart, with the two sides pushing rival plans to increase the government's borrowing limit and cut the budget deficit. Last night, Speaker of the House John Boehner canceled a vote on his proposal after a rebellion from Tea Party conservatives put the bill in jeopardy of being rejected. The competing plan put forward by Senate Majority Leader Harry Reid, meanwhile, is not likely to get any Republican support. Now, analysts say that any compromise deal that emerges will likely be a stopgap measure and unlikely to seriously address the nation's long-term budget problems. So even if the debt ceiling is raised, one or more of the rating agencies could still cut the U.S.'s AAA rating. The uncertainty surrounding the debate is already taking a toll on the stock market. And the bond markets, a sale of 7-year Treasury bills yesterday showed weak demand from investors. Despite the concerns, the yield on the 10-year note is still well below 3%. Meanwhile, the dollar is showing some strength against other major currencies today. The euro is especially weak after Moody's Investor Service put Spain's sovereign debt ratings on review for a possible downgrade. Moody's cited continued funding pressures on the Spanish government. The U.S. economy is also in focus today, after the Commerce Department said that gross domestic product grew by just 1.3% in the second quarter. That's short of even economists' reduced expectations, and much lower than the 3.6% growth forecast as recently as 2 months ago. Meanwhile, first quarter GDP was revised all the way down to 0.4%. Taking the last 2 quarters together, this was the weakest 6-month period since the beginning of the economic recovery in 2009. Turning to corporate news, 2 members of the Dow Jones Industrial Average are due out with earnings this morning. Chevron posted a 42% increase in profit over the same period last year. The company's revenue also jumped, due mainly to higher crude oil and gasoline prices during the quarter. And Merck reported that its second quarter profit was 2.5 times higher than last year, while revenue rose 7%. Both the top line and bottom line numbers matched expectations. Merck also said it remains on track to cut $3.5 billion by the end of next year and plans to reduce its workforce by an additional 12 to 13% by 2015. Staying in the pharmaceutical sector, biotechnology giant Amgen posted a decline in its net income, but sales rose 4%. And the company said its revenue for the full year will come in at the high end of analyst estimates. Amgen shares are rising more than 2% on the news. And after yesterday's closing bell, Starbucks reported a 34% increase in its profit, helped by rising customer visits to its coffee shops. Starbucks also lifted its outlook for the full fiscal year and laid out plans to accelerate new store openings. Right now, the stock is rising about 1.5%, near a 52-week high. Starbucks is up 60% over the past year. And finally, one of the biggest stock winners today may be Yahoo. It's jumping more than 5% after reaching an agreement with its Chinese partner, Alibaba, on that firm's online payment business. Alibaba had previously transferred control of Alipay to another company controlled by its CEO, essentially diluting Yahoo's 43% stake. Another Alibaba shareholder, Japan's SoftBank, is also involved in the new agreement. That's the latest from Weiss Research. Have a great trading day.